So, IAS 21, the amending, it's another current issue for SBR students. IASB International Accounting Standard Board initiated a research project that examined the previous research conducted by the Korean Accounting Standard Board. This research considered whether any work on IAS 21 need to be considered. The effects in foreign exchange rates was appropriate. So in this video, in this class, we will discuss some of the issues which were raised by the project in the context of IAS 21. So firstly, the issue is the foreign exchange market is affected by many factors. And in a country like floating rates, their exchange rates are inevitably exposed to volatility due to the facts of different factors influencing the market. For example, the ongoing problem of Greece repaying its enormous debts has significantly affected the value of the euro. Same in same scenario here in Pakistan, that Pakistan is paying our debts, so it's affecting the value of Pakistani rupees. So as the barriers to international flows of capital are further relaxed, the volatility of foreign exchange market is likely to continue, and this volatility affects that engage in foreign currency transactions, and there has been a resultant call in some quarters to amend IAS 21. Further issue, IFRS 7, that is the financial instrument disclosures, requires the disclosure of market risk, which is the risk that fair value of financial instrument will fluctuate due to change in market price and market risk reflect in part, you know, uh, for definition of foreign currency risk relates to only to financial instruments, and IFRS 7 and IS 21 has a different conceptual basis. IFRS is based upon the distinction between financial and non-financial elements, whereas IS 21 utilizes the monetary and non-monetary differentiation. So the other issue is the financial and non-financial distinction determines whether an item is subject to foreign currency risk under IFRS 7, where IS 21 uses monetary, non-monetary distinction thereby causing potential conceptual confusion. Why so? Because IS 21 uh, uses monetary, non-monetary distinction, thereby possibly causing, as I said, conceptual confusion, because foreign currency risk is a little mentioned in IS 21, and on applying the definition of IFRS 7, IS 21 non-financial instruments could be interpreted as carrying no foreign currency risk, right? Further, uh, foreign currency translation should be so foreign currency translation should be conceptually uh, yeah, should be conceptually consistent with the conceptual framework, and IS 21, was issued in 1983 with the objectives of prescribing how to include foreign currency transaction and foreign currency operations in financial statements of an entity and how to translate financial statement into a presentation currency. There is little conceptual clarification of the translation requirements in IS 21. So the requirements of IS 21 divided in two main areas. The reporting of foreign currency transaction in the functional currency, and the translation of the presentation currency exchange differences arising from the monetary items are reported in P&L, that means profit or loss in the period, with one exception, that is exchange differences arising on monetary terms items form part of the reporting entity's net investment are recognized initially in other comprehensive income. Okay. Further, there is an argument that current accounting standard current accounting standard so there is a current accounting standard might not reflect the true economic substance of long-term monetary assets and liabilities denominated in foreign currency. Why so? Because foreign exchange rates at the end of the reporting period are used to translate amounts that are to be repaid in the future. IS 21 states that foreign currency monetary amounts should be reported using the closing rate with gains or loss, recognizing the profit or loss in the period in which they arise, even the rate is abnormally high or low. So there are cases where an exchange rate is likely to be reversed. And thus it may not be appropriate to recognize exchange gains or losses of all monetary items as realized gains or losses. There's an argument that consideration should be given as to whether foreign exchange gains or losses should be recognized in profit or loss or other comprehensive income.
मैं चाय चढ़ाई थी है मुझे देना है एक वर्ड लिखो
So furthermore, any potential fluctuation in profit or loss account would be reduced by recognizing in OCI those foreign exchange gains, losses of non-current items with a high possibility of reversal. So furthermore, the question would arise to whether this item should be recognized in OCI or could be reclassified. So IAS is stating as there is no obvious principle that drives gains and losses out of profit or loss and into OCI, and there is no issue among the ISB constituents about what should be in PNL and what should be in OCI. So no constituents what should be in PNL and should be in OCI. So far, so good. But IAS 21 does provide some guidance on monetary items by stating that when a gain or loss on monetary item is recognized in OCI, any exchange component of that gain or loss shall be recognized in OCI. Conversely, when gain or loss on non-monetary item is recognized in profit or loss, any exchange component that gain or loss shall be recognized in profit or loss. Further, long-term liability. As far as the long-term liabilities are concerned, in case of long-term liabilities, translation gains loss must be recognized in profit or loss. Recognized in profit or loss. And treated as part of reported profit. In some jurisdictions, these gains are treated as unrealized for the purpose of computing distributable profit. The reasoning is that there is a greater likelihood there is a greater likelihood in the case of long-term liabilities that the fluctuation in exchange rate is reversed before repayment of so before as I said before the repayment of liability falls. Okay. So as stated already, IAS 21, it requires all foreign amounts to pay use date, non-monetary item, historical data are reported as exchange rate at the date property existed when the fair values were determined. As monetary items are translated at the closing rate, the items are not stated at fair value. The using of the closing rate does provide some fair value information. Now, finally, average exchange rate a question arises which exchange rate to use, and therefore it would be useful to have some more specific guidance on the use of the average exchange rate. So IS 21 allows a certain amount of flexibility in calculating average rate. It depends on factors such as in depend on factors such as the frequency and value of farming. The period over which the of entities is given in IS 21, how to determine so in IAS, we have its initial assessments on this project and decided that scope amendments were in subject to fees this session as well. So what I said, an amount of flexibility in calculating average rate. It depends on factors such as frequency, value of transactions. No guidance given in IS 21 how to determine necessary in May 2000. It will become the program subject to that's the end, and I'll see you in the next session very soon.